Let's review why trying to make money by trading stocks is an insidious sucker's bet. First, it is difficult, if not impossible, to find bargains on the stock market because the stock market, like all financial markets, are extremely efficient. Second, when you buy a stock, you do so because you are convinced that the price is going to go up. However, you're buying them on the secondary market, and therefore you are buying them from somebody who is equally convinced that the price is going to go down. Now, what is it makes you right most of the time and him wrong? Thirdly, buying low and selling high sounds simple enough. And indeed, it is easy to identify whether a stock price is high or low by historical standards. But historical standards don't count. It's future standards that count, and it is almost impossible to consistently identify a stock whose price is high or low by future standards. Fourthly, the law of large numbers says that with enough trades, the number of your correct decisions are going to be approximately equal to the number of your incorrect decisions. This might lead you to think that, well, therefore I would break even. But that is not the case. Because of taxes and commissions, you must be right significantly more than you are wrong just to break even. And the probability of doing that is very, very low when an event is random. And then there's the human factor. Many people will tell you that the emotions that drive our decisions to buy or sell stocks are greed and fear. However, I maintain that the emotions are fear and hope, both of which are subsets of greed. Now, the most basic principle for making money in the stock market is cut your losses short and let your profits run. But because we humans are driven by fear and hope, we tend to do just the opposite. Traders, when they make a good decision, are fearful that their profits will soon disappear if the price of the stock goes back down. So they are quick to cash in on profitable trades, thereby cutting their profit short. However, they are slow to bail out of losing trades because when they're wrong, it hurts. They lose money. And so they let their losses run. Because losing money is so painful, we tend to hold on to a bad trade, hoping that the situation will correct itself. So, if the law of large numbers says that with enough attempts, your wins, the number of your wins will equal the number of your losses, then you are doomed in the long run if you cut your profit short and let your losses run, because the value of your profits will be lower than the value of your losses. Let me tell you a personal experience of mine and how I let fear and hope guide my decisions. In 2009, I bought 1,000 shares of Apple for about $80 a share. That was in January. In June, 6 months later, I sold those 1,000 shares for $135 a piece, grossing me a sweet little profit of $55,000. I had to pay tax at my highest marginal tax rate, which I think was about 30%. So that was about $16,500. So I netted a little less than $40,000 from that trade. However, since that time, Apple has gone up in price and it has split on several occasions. Today, Apple is selling for $125 a share, but because of all of the splits, I would have owned many, many more shares than I had originally purchased. Had I held on today, the value of that investment would have increased by about 1,000%. Had I not been so quick to cut my profits short, the value of that asset would be worth about $1.2 million. So, being quick on the trigger, fearing that I would lose my profits, it cost me a little over $1 million. Fortunately, my horror story about my hope didn't cost me as much. In 1983, I was sitting in my office at the World Bank and my broker called me. He said, "Bill, it's April 15th. We need to invest $2,000 by the end of the day in order to get that tax write-off for an IRA." Back in those days, $2,000 was the maximum you could contribute to an IRA. I told him, well, I don't know exactly what I wanted to invest in. Did he have any ideas? He said, yes. There is this up-and-coming company. It's fairly new, and it's been very strong on the stock market. It was established by an entrepreneur with a great history of creating successful firms by the name of Nolan Bushnell. The stock is called Pizza Time Theater. I said, wow, that's kind of weird. He said, yeah, I know, but it's a great concept, and I think it's going to be a very successful company in the long run. I said, okay, let's do it. So I invested $2,000 in 1983 in Pizza Time Theater. Now, let's take a look and see what happened to the price of that stock. I paid about $60 a share, if memory serves, and once I bought it, the price started to go up. But it wasn't too long before the price started to go back down. And it went even farther down. So I called my broker. I said, hey, what's going on here? He said, well, there's nothing really going on. He said, but, we might expect a little consolidation, a little pullback. It has risen so far, so fast, and nothing goes straight up forever. I said, well, okay, so let's hang in there. Well, of course, as you might guess, the stock continued to fall. So I called up my broker. He said, yeah, it looks like they're having some kind of financial problems. He said, maybe we should get out, but I tell you what, don't do it today. Let's wait for the stock price to pop back up, and then we can sell it on the pop. Now, that was a very enticing buzz phrase that was going around Wall Street back in the 80s. Sell it on the pop. That means when it spikes back up short term, sell it and you can save yourself a couple of $100. So that's what I plan to do. Lo and behold, it popped back up. Did I sell it on the pop? Oh no. I had convinced myself that the stock had turned around and was going back up. Well, of course, as you might guess, it did not. It went down, and it went down. I said, okay, I got to get out of this. I'm tired of even looking at this. Let me sell it. As soon as it bounces back up, I'm going to sell it. Not long after that, it bounces back up, and guess what? I didn't sell it. I had convinced myself that it has turned around, and in the long run, it would be a profitable trade. And as you might guess, it went down, down, down to virtually nothing. As it turns out, Pizza Time Theater declared bankruptcy and was later reorganized under Chuck E. Cheese. Now, I'm sure to you this sounds completely idiotic, and you might think that this bad decision was due to my stupidity, my amateurism, my irrationality. Now, I don't deny having those attributes, but what I was doing was acting absolutely human. This is a phenomenon that is ubiquitous in virtually all endeavors of human activity. I call it the Akron Effect. Now, let me define for you the Akron Effect, and I'll tell you why I call it that. The Akron Effect is that when you surmise that a situation is headed in an undesirable direction, but letting go of it would be painful, you hang on to avoid the pain and hope, there's that word, hope, that it resolves itself. Pain avoidance, then, is our excuse to procrastinate. Now, as the situation continues to get worse, letting go would even be more painful, further motivating you to stick with it and hope that it gets better. Ultimately, you continue to hang on to this bad situation until it can't get any worse. Now, I call it the Akron Effect because there was an interesting event in 1932. As it turns out, the Zeppelin dirigible USS Akron was attempting to land at a military base just outside of San Diego. It let out its mooring lines and a bunch of guys were on the ground pulling on those ropes, reeling it in to secure it. And then something happened.
But then disaster strikes. During a landing at Camp Kearny, California, inexperienced soldiers man the mooring lines. The desert heat forces the Akron to rise. 3 men hold on to the portside rope. Two of them lose their holds and fall to their death. A third man clings to the rope. As the ship climbs, he somehow holds on.
Well, I thought that they would save me if I had strength enough to hold on to the ropes. I was sitting astraddle of one of the toggles and had my feet and arms wrapped around the rest of the ropes.
It takes 2 hours to save him. He walks away without a single scratch.
So, there are the guys being pulled back up into the air. Some of them let go immediately, and some of them hold on until they get 3 or 4 feet in the air. And then what's going through their mind is this: if I let go of this rope, it's going to be painful. So let me hope that it comes back down. Some of them, of course, let go. Well, those who didn't let go get pulled up another 8 or 10 feet in the air. They say, wow, if I let go here, it's really going to hurt. Let me hang on. Some of them, of course, bail out. Now it gets 15, 20 feet in the air, and some of them are saying, if I let go here, it is really going to hurt. As a matter of fact, the last guy off that let go broke his arm. And now they get pulled 30 or 40 feet in the air. The last 3 guys. They're saying to themselves, if I let go here, it's really going to be some serious trouble. And I'm sure it would hurt like hell, but they would probably survive. Or at least it would have been a better outcome than what it turned out to be. Now, when it came to my investment in Pizza Time Theater, I was one of those 2 guys that died. What would you have done? Would you have let go of the rope immediately? I'm sure you are saying that you would. And it's easy to make that decision from a distance and from a historical perspective. But when you're in the moment, it's not quite so easy. On both occasions where I had cut my profit short and let my losses run, I was intellectually aware of the utterly human delusions by which I was allowing myself to be entrapped. But I couldn't do anything about it. I was totally paralyzed. Intuitively, I could easily convince myself that this time, luck was on my side. Now, had I bailed out when I knew intellectually that I should have, and put that $2,000 into an investment that would have earned, say, 5% compounded, today that asset would be worth about $9,500 rather than zero. The best way to avoid this trap is to avoid trying to make profits by trading stocks. Take my advice. Do not learn this lesson the expensive way.